But let's talk about some more stocks that are in the news. Hormuz is here to tell us about Bandhan Bank and Man Industries. Hormuz, why are you watching out for those?
A couple of them, they're initiating coverages on, have brokerages, and UBS has initiated coverage on Bandhan Bank. They're neutral on the stock. 230 rupees is the price target that they're set. They're saying that they are expecting a limited and gradual decline in high credit costs for its MFI book, is what they're saying. And the new CEO appointment is now going to become a medium-term overhang for more strategic clarity for the bank, is what UBS is saying. And a large part of the expected improvement in credit costs appears to be in the price, is why UBS is neutral, and because of that, they see limited upside potential as well on Bandhan Bank. Now, MK has initiated coverage on Man Industries, and they are expecting a price target of 500 rupees there. And they are saying that the stock has doubled in the recent times because of the back of better business fundamentals and executing the expansion plans that they had announced earlier. What they are also saying is that the stock is yet to factor in the project execution here on, from which is expected to double the group's revenue over the next 3 to 4 years. So that is yet to be factored in. And this transition from potential to delivery is likely to create substantial shareholder value going forward, is what MK believes for Man Industries. And although the stock itself is trading at a higher valuation compared to the sector as a whole, they are finding comfort when it comes to the FY27 price to earnings multiple, which is at 8.2 times. So hence MK is bullish on Man Industries 500 rupee price target.
Okay, thanks a lot, Hormuz, for that. So we just have about 30 seconds left for the market opening, and looks like it's going to be a good one. Remember, the July series has kicked off on a very strong note. The Nifty has closed above 24,000. The SENSEX has closed above 79,000 for the first time. And now, in the June series, by the way, we have a 7% gain under our belt. So looks like these good tidings are something that can continue. Is the risk reward still favorable for traders? Time will tell, because there's definitely some amount of prudence that's needed at this point in time. But the opening bell is indicating a positive start, so let's keep that on our radar. 30 points higher, Nifty well above the 24,000 mark. The mid-cap index is really surging now, and the big moves are coming into the telecom space. Bharti Airtel and Reliance are your big movers, up 1.5%. On both those stocks, Bharti Airtel seeing big volume gains as well this morning. ONGC, HUL, Coal India and HCL Tech are a couple of other stocks that are trending in the green right now. On the downside, you have names like Ultratech Cement, IndusInd Bank, Adani Ports, Grasim and M&M that are trending a tad bit in the red, just preventing the market from moving higher. But by the way, look at the momentum on the upside. 24,100 is here. It's a 70-point rally just at opening bell, looking very strong. The SENSEX is up 250 points. The Bank Nifty is up 100 points. So there's a lot of momentum. Look at the market breadth. That will give you a true indication of how things are going. 1,400 stocks on the advancing side. Even in the broader markets, plenty of stocks in PSU banks, in PSUs in general, BHEL, PNB, etc., SAIL, all looking very good. By the way, Reliance is now up 2% and making its presence felt. So looking very strong over there.
It's actually, yeah, I mean, the market can say a big thank you to Reliance, because that is the one which took a break yesterday because it had a decent move. Actually, it was up yesterday as well, but not as much as the day before. But it's starting about 1.5% higher. The other stocks, I mean, so Idea's got the weakest response. It's up about 0.75%. Maybe that'll change. Bharti is up 1.6%, and Indus Tower is actually up 5%. I was talking about Indus Tower early on. So, of course, this, the technical aspect as well. So, yeah, the telecom stocks off the block. BHEL is up about 2.5%. There is CDSL, some of the other names outside the telecom space, big volume-led gains. CDSL is up 6.5%. It'll come up for you on your screens. JSW Infra, Vivek was telling us about the acquisition, 3.5% higher there. Texmaco Rail is up 5.5%. These are all the big, broader market volume-led gains. Lots of upgrades on Star Health, 3% this morning on Star Health. That's the largest sort of standalone health insurer, private insurer. Sambhi is up 4%. Again, something we mentioned in our top 10 list with our research team. There is KDDL, Kamla Dials, which is up 7%. Usually doesn't come up with with this much, but it's got volumes. So mentioning that. Ujjivan Small Finance Bank has been a bit weak lately, 3% higher, so a bit of pullback there coming through. And look at 361, the wealth management company. It's had a fantastic week. So 361 is up, I think another 5-6%, and for this week it's up 20%. Friday to right now. So that's the gain that we're seeing on 361 right now. On the downside, Polycab is the big loser. The block has, I think, gone through huge volumes. On your screen, they're actually 2.7% equity changed hands. 4.5% cut there. India Cements is down 2%. Ultratech, after the run-up yesterday, is down about 1.5%. So the two deal stocks are both down 1.5% to 2% respectively. IndusInd Bank is down about 1.25%, and Bank of Baroda is down about 1.25% as well. So that's actually, and maybe if you want to look at one more name which is down meaningfully with volumes, it's Godfrey Phillips. There's a 4% cut on Godfrey Phillips, but it's just starting off, so we'll watch this one and how it goes. Lodha, which is macro tech developers, is also down 2%. It's got some volumes in it. But again, this is initial, very, very initial. 65 points on the Nifty. Rima.
Well, some more stocks. Walk hard. There is a media announcement closed at about 12:30 p.m. today. So Walk hard is seeing some buying, 5% gain on Walk hard. Man Industries, where MK has initiated coverage with a buy, target price 500. The stock is at 410. They are saying there are industry tailwinds in the form of demand growth for pipes. So Man Industries is a mover today. GMR Power has a gain of 4%. Its arm has received settlement claims worth 850 crore as a first tranche from NHAI. So positive news flow on that. Navkar Corp is also in the green. The stock is at 115, which is higher than the price at which JSW Infra has bought a 70% stake, and even higher than the open offer price of 105 rupees. So Navkar Corp continues to see buying. Brigade is another stock which is on our radar. They've announced some residential project where the value of it could be 1,100 crore rupees. So Brigade Infra also seeing some amount of buying. Polycab is now extending the fall, now down close to about 5%. And a quick word on cement names. India Cement, yesterday's big star, is down nearly 2%. So some retreat seen on India Cements. But on the flip side, Burnpur Cement is seeing a fair amount of buying. At least the last time I checked, Burnpur Cement had a gain of close to about 8%. Intellect Design Arena is higher. Kalyan Jewelers 10%. Is also another stock which is popped up on pretty large volumes.
Suddenly there's lots of new names entering the mix now. So yeah, you're right. Kalyan Jewelers is up 10%, 523. GNFC was not there when I read out from the list, 4% on that one. Big volumes. Policy Bazaar was not in the mix in the morning. It's up 3.5%. So, a very quick pickup and ramp up as far as volumes are concerned, with decent gains as well. So it's a higher start, a steady, very steady start. Ideas down 1.25%. So I just want to mention that. But I guess you'll have to hear now from Idea as well in terms of a tariff increase. Jio's done it, Bharti's done it, and we'll see. And initially, after a very well anticipated kind of news flow like this, there is a little bit of profit booking which kicks in. People who kind of are playing that, just that event will book profits, and I think there'll be that element of price action today. But beyond that, I think if there are more hikes in the offing, the story is good, there'll be a buying which starts to come back in again.
Vodafone
So this is immediately post news reaction. Sorry.
Yeah. No, Vodafone Ideas also moved up. The FPO price was 10, 11 rupees, and that happened just in the month of April.
The government put in money at $10.
At 10,
and
the
it's at
FPO
19.
It's at 18.5. So you've got a 70-80% return in a span of 2 months.
Yeah.
So I guess that also explains the profit booking.
Oh yeah,
okay,
absolutely.
I just wanted to mention a couple of more stocks that are doing really well. PB Fintech is one stock that has hit a fresh high today at 1,420 rupees on PB Fintech. Remember, the issue price of PB Fintech was 980, and since then the stock has come a long way. The stock, after listing, of course, it had dropped below its IPO price, so we saw all of that. But now PB Fintech is well above its IPO price of 980, fresh highs over there. A couple of other stocks that we're looking at. Reliance is now at a fresh high, by the way, so don't lose sight of that. Tech Mahindra is at a fresh high as well, and many more names actually in the broader markets. Good looking screen here.
Oh yeah, absolutely. Let's bring in our market master today, Tahir Badshah, CIO at Invesco Mutual Fund. Tahir, good morning. Good to have you with us here. Thank you very much for your time. So on telecom, what's the view now, Tahir? This is the first of many hikes, and you've got to wait again against, the news flow and the story, etc., against what you're paying for these stocks now. So how does that look?
Yeah, so I think, this has obviously come after a very long period of time. But at the same time, as you know, this was also in the works, and it was built into the market expectations over the last some time. And some of the performance of the sector in the last some time has been reflective of that as well. But the good part is that, when we tie this up with the fact that, there is not really much in terms of now money being spent on spectrum, and that probably, gives the chance for some of these companies to incrementally improve their balance sheets as well going forward. So I think it's a good situation from a longer term perspective. Part of it is priced in, but I think over a period of time we can probably see profitability improve. These are at some level very high fixed cost businesses, so obviously a lot of it translates into the bottom line, and valuations are not necessarily very demanding. So I think we will probably see some more legs as far as the sector is concerned.
Okay, Tahir, hi, good morning, and thanks for joining in. Overall, for the market, how are you feeling now? I mean, is there any reason to be concerned at all? Because, it's record highs every other day, and at some point, a correction's got to kick in, right? Do you think there are reasons to believe that a correction is coming, or is it just steady state for the market?
So yeah, when you don't see any reasons, and that is a time when you worry the most, as you know. So our job is to worry, both in a bear market as well as in a bull market, and probably now more so in a raging bull market. But I think there are a few things that we have to watch for. I don't know whether they will become worry issues or worry matters. But clearly everything from the budget and its positioning and what it means in terms of whether the budget will be able to kind of broaden the economy, or will it probably mean higher costs, higher fiscal. Those are the things which need to be watched from the budget. We obviously have to contend with the outcome of the monsoons. It's important this year. Forecasts are good, but we have to see the reality. We then contend with some of the other issues like US elections. It matters from a global standpoint. And then, of course, there is a whole discussion about interest rates and inflation, which we have not seen an end to as such, and that will also be debated. So I think there are things which are there on the windscreen, and we have to kind of not necessarily worry, but probably prepare from a portfolio standpoint or from a risk mitigation standpoint. So I think that's what we'll have to kind of keep doing over the next 6 months, as you know.
Okay. Just two more names. It's a vibrant screen, Tahir. So single stocks, you'd agree, right? So much happening. I'm not sure if there's any news flow or buzz around 361, but 10% higher on that wealth management company on the stock. 1,020 now on 361. Moriput Laboratories is up. If you can have these stocks up, please. Yeah, there you go. GE Shipping is up 4.5%. Moriput Laboratories is up 9%. Now, these are newer names which are coming through. And Steel Authority is up 3% with humongous volumes, very large volumes for this point in the day. So keep an eye out on that as well. Newer and newer stocks coming through into the mix. Tahir, heard on the wealth management side, lots of initiations, right, lately. 361 was one of those companies which saw lots of brokers initiating, etc. on. I think appetite is widening. Or maybe people are, because they're so hungry for ideas outside of the top 100 names. Do you sense that? Are you guys also sort of going down the curve or no? Are you climbing back up?
Well, I would say I'm trying to consolidate. I don't really want to kind of go down the curve as much. And some of the moves that we are seeing are obviously baffling, especially in short periods of time when we are seeing those kind of rallies. Some of these stocks, however, are in our ownership for some time. So, okay, we are to some extent even enjoying the fruits. But obviously, it makes life a little more difficult, because the thing is that, we've anticipated something which will happen over a 18-month period, and happens within less than 3 months. That's something which calls for action once again. So, those kind of challenges, I think some of these merited, but not all of it in such a short period of time. So we try to, so like I was trying to, indicate that this is a year in which you have to probably be a lot more watchful of risk. You are getting a lot of return, but you have to be a lot more cautious in terms of your risk management. Maybe last year you didn't have to do as much, but you have to think a lot more in terms of risk rather than return in 2024, or at least for the second half of 2024.
Yeah, no. As someone jokingly said, but I think it's also true. The worst thing about what is worse than not buying something which went up is to sell something and then watch it go up another 50% or whatever.
Unless you rotated that money into something else, which has also made you money.
Which is also done.
But otherwise, that's painful.
No, but have you had some of those? I mean, if you
Quite a
stuff
number
that
of
you
them, yeah. I mean,
that
not
you
as
got
many in
out of it.
2024.
Yeah.
We had a fair bit of them during the COVID period for sure.
Okay. Tahir, I know you don't comment on individual stocks, but I just want to ask you how one should approach a situation like this, right? I'm talking about a name like Polycab. So Polycab, as we speak, is down about 3% odd. It's come off a bit from the high. I mean, great business, very strong promoters, good moat, etc. But now promoters are looking to sell a bit of their stake. So 2% stake is being sold by the promoters. What do you do at a time like this? Do you keep the faith, considering the business and the momentum is good, and just ignore the fact that promoters are cashing out a bit? I mean, in such a situation, what's the best way to approach it?
So Sonia, it's obviously it's upon the merits of the individual case, and I think a couple of names that you mentioned along the way have been companies where we have probably seen them grow very aggressively. They have been of the what we call the challenger variety, who are basically trying to close the gap with the leader in the respective industries, and that's something which has excited us as a proposition. So I think that is where some of the action in some of these names that are showing that kind of a color, that can they grow ahead of the market, can they grow ahead of their own industry and well ahead of the system rate of growth. And I think there have been a number of cases, even in industries which haven't had a lot of tailwind, we've seen those who have executed well and delivered well have been significantly re-rated. And I think that's what is going on in a few of these.
Okay, significant re-rating in many of these. Got it. The other space I wanted to ask you about, I mean, I know we've spoken about banks ad nauseum, but is this a time to be taking a fresh bet on many of these private sector banking names? I mean, there's large delivery-based buying happening in names like ICICI Bank, HDFC Bank, Kotak Mahindra Bank. What is happening here, and why have investors suddenly become so bullish?
I think one by one, the market is broadening, and there is obviously a hunt for ideas and pockets of the market which have not. See, I think there's a peculiar situation where while we know that the market has done well at an aggregate level, that there are some pockets of the market which have not done as well too. And even in our scheme of things, we have looked at some of those areas which have turned relative value, if not absolute value, and try to balance our portfolios accordingly. So I think banks feature in that segment. Maybe tech also, I would say, to some extent, should be a sector which may have those kind of characteristics. We've seen a fair bit of disappointment or lackluster approach as far as that sector is concerned. I think if the discussion around the US economy has now decisively changed from recession to what kind of growth, I think tech sector should not probably be very far behind. So same in the case of banking as well. Credit growth, etc., has held up well. There is a certain amount of still a little bit of difference as far as the nature of the credit growth is concerned, driven more by personal, unsecured, etc. So that's somewhat coming in the way. But by and large, this is a place where valuations are not exactly a challenge. So I think that's something which can excite the market, especially when many other pockets of the market are drying out in terms of relative value.
Okay, any other pockets where you think valuations are exciting? I mean, one space that I can think of is IT, which has been a big underperformer lately. Do you think money will start moving to IT as well? That's the only pocket that hasn't done as well as some of its larger cap peers. Any thoughts there?
Absolutely. I mean, I just, like I mentioned a while back, that, this is a sector which I think should kind of see some color. I think much of 2023 we saw business conditions not being as bad, deal wins, etc. If that is an indicator, has held up well. But by and large, the commentaries has been that let's hold back on the execution, because ground level reality for the US economy in general was not as great. But I think that we moved away from that discussion. 2024 onwards, there's probably the recession word has not just come by. So I think, and in fact, it is moving decisively towards how strong can the growth be. And it's therefore not surprising that interest rate cuts have not come through, despite all the expectations in the market. So I think it is probably a quarter away when, commentaries for tech companies get better from a execution or a ramp up standpoint. And I think if what is more like a 3 to 5% growth turns out to be a 7 to 8% growth, I think that should be enough to, drive a fair bit of rally in this sector.
Okay, one last question before we let you go, because it is, the impending event to watch out for, which is the union budget. It's going to be the first, full-blown budget post the government coming into power for the third term. So they may have a lot of, sort of aces up their sleeve, whether it's in manufacturing, whether it's in defense, and a whole host of affordable housing. Which are the spaces that you're going to focus on, where you think that some kind of impetus or incentive could be given in this budget?
Well, obviously, I mean, the ignored pocket of the market is low end sections of the pyramid, which have actually not done as well. Many estimates seem to suggest that disposable income in the lower to mid parts of the income pyramid have actually are lower than what they used to be pre-COVID, and that's something which is quite alarming at one level. And therefore, it's not surprising to see the kind of dichotomy of trends in growth that we've seen in different parts of the consumption basket. So I think that will be the obvious pocket to address, especially from a political standpoint as well as an ongoing political standpoint. And it may not necessarily be a bad thing. It will broaden the economy, I would like to think, and it will also mean some more balancing as far as market valuations are concerned from one part of the market to the other. So clearly, a value consumption, maybe some parts of FMCG, some lower end pockets, rural-oriented stories. That's a part which market is starting to feel excited about, and that excitement will probably continue to develop further in the run-up to the budget or after the budget.
Okay, all right. We will let you go on that note. Thank you so much for joining us, Tahir. Appreciate your time here on CNBC TV 18. Well, moving on, the market is, by the way, looking very good. So don't lose sight of that. Almost 80 points higher now, 24,100 with ease. The SENSEX almost at 80,000, just 500 points away from that magic milestone of 80,000 on the SENSEX, and the mid-cap index is up 250 points. But as Tahir said, always better to be prudent, to be a bit cautious, because when you least expect it is when a correction comes through. But for now, there seems to be no problems on the anvil. But TTK Prestige is one stock on our radar today. The company has signed an agreement with a global consultant to develop a 5-year long-term business strategy. And for the same, they will invest 12 crores over the next 6 months. To discuss more on this development, we have Venkatesh Vijay Raghav, who is the MD designate and CEO of TTK Prestige, who joins us now. Venkatesh, thanks a lot for joining in. Can you tell us what is this agreement that you've signed in for 5 years? What will this investment bring to you in terms of returns? And what are you looking at over, in terms of business development as well?
Yeah, like you would know that we've recently gone through a complete management rejig with a lot of our leaders sort of superannuating, having taken the organization through a very successful journey. A large part of the leadership today is new, and we've sort of had a management change with me coming in as well. The organization, TTK Prestige, has had a huge legacy and a very high success rate in the last couple of decades. And we believe that as we move forward with the changing scenario of the country, and also in terms of the categories and the industry, it would be prudent for us to have a look at how do we sort of reboot and take the next leap. As a part of this exercise, internally, a lot of work has been happening, and we've sort of engaged a strategic partnership with one of the partners. We're in initial stages to explore the possibilities of that partnership, helping us understand where the growths can come from, what sort of challenges that we need to surmount, and therefore, how do we sort of prepare ourselves for the next 5-10 years? And this is part of that exercise. This is one of the initiatives that we've looked at across the spectrum, and a lot more that would come in from us as we move forward.
Okay, so, since you've just come on board, and I'm sure there's some fresh vigor with this whole rejig and new energy on board in TTK Prestige, I just wanted to understand what is the strategy of the company now, because demand trends have been slightly on the muted side. Growth has not been as good as perhaps what it was a couple of years ago. So in order to spur growth, spur demand, what kind of strategy or change in strategy would you want to adopt?
So, like I've been consistently maintaining, I think one significant strategy that has always held good for the company is innovation. And as a country, India has multiple opportunities across different price segments today. So innovation, I think, is core to the whole exercise, where we see a lot of premiumization happening at one end, a lot of upgradation happening from the mid to the high end, from the low to the mid end. So innovation of products, innovation of existing categories would be a very significant thrust area for us as we move forward. We do believe as the country starts moving up the ladder in terms of economic growth, premiumization is one aspect of the game that we would aggressively pursue. Having said that, there are enough opportunities at the mass premium and the mass market end as well. And that's something that we would pursue together. But to the core of this exercise, I believe innovation and thrust on innovation is going to be the way forward. And this has been the core of the organization for all the success that it's had in the last few years.
So zeroing in particularly on premiumization, Venkatesh, hi, and congratulations on coming on board. What percentage of your portfolio today would be at the premium end, according to your own internal calculations? And since you've taken over, you would have also done an assessment of the entire business. It's long old legacy business, which is done very well. Are there any pockets where you think that perhaps is not suited now for the next 5 or 10 years and the company could veer away from it?
No, I don't think so. I think one of the good things that we as a company have had is we've had a very strong portfolio focused on a few core categories and very strong market shares and strong leadership positions in some of these categories. And these categories also have relevance and a strong growth path as we move forward. Of course, subject to the sort of downturn that's happening today, and we expect that to sort of come back over a period of time. So in my mind, I think the spaces that we operate are very clearly spaces that we believe would continue to grow and have good headroom for us to grow. So to that extent, I think a very sharp focus on some of our core categories is something that we would pursue very strongly, continue to pursue, and maybe add a few categories of scale as we move forward. That's work in progress as I would speak right now.
Venkatesh, hi, good morning. And again, congratulations from me as well. Prashant here. So this is a general management consulting firm, like a McKinsey or some. Like, would you tell us who this is? Who's been brought on board?
No, I'm not at liberty at this point of time to sort of
okay, fair enough.
Talk about the name right now.
So what have you told them? What do you need to get done? Do you want to cut cost? Do you want to have you told them to do a survey to identify newer markets you can enter? I mean, what are the terms of reference in that sense?
So what I would sort of look at as immediate priority for the organization. If you were to look at our financials, I think we are well placed in terms of financials. It's been a well-run organization with a very strong P&L and cash reserves and cash flows as well. What probably would be the thrust area for us is to get our top-line growth and in line with the opportunities and the headroom available. I think our priority is to get our top-line growth right. And that's one objective that we've sort of kept it central to this entire focus for the next 5 to 10 years. And this partnership probably will help us understand that better and the opportunities in that space better.
And the last, I think in February when we had had you guys on, you'd said that for FY25 you're expecting a reasonably high single-digit growth. That was what that number broadly in terms of not a guidance, but that's what we'll see at least now. And this, of course, will take time to materialize.
Yeah, so I wouldn't want to talk specifics at this point of time, given the timing of the conversation. But suffice to say that I think the industry still has not sort of come back in trends. I think we're bottoming out now, and maybe in the next few quarters, we would see the industry grow faster, and hopefully that would lead to the growth as we move forward.
So the big thrust, as you said, to bring this on board is going to be top-line growth, right? Over the next 5, 10 years, as you said. So how will that happen? Will you enter new product categories? Is there thinking on those lines? Completely new sort of product categories? Because you will, of course, try to push in where you're strong in any way. And the other one is acquisition. I mean, we've been hearing for some time that there is an acquisition around the corner, something between 500 and 1,000 crores, but not happened yet. And so just on both those points, yes.
Yeah, so I think there are three parts to this conversation on top-line growth. One, of course, we consistently continue to sort of consolidate our position in our core categories. Given that the headroom available in these categories is far higher, and I think we are well placed to sort of consolidate our growths there and accelerate them through a combination of innovation and go-to-market. Second, of course, like I said, we pick up a few categories of scale that we believe are relevant to the brand and the company, and we sort of enter into those categories. Acquisitions is something that I wouldn't be able to comment at this point of time. It's a little too early for me to comment. But having said that, we do believe that there are opportunities in the spaces that we operate. If the right value and the right opportunity comes in, we would be open to acquire as well. So it's a combination of organic and inorganic growth that we are looking at.
Combination of organic and inorganic growth. Got it. Can you give us some more numbers in the kitchen and home appliances segment? What has your volume growth been up until now, year to date?
No, so like I said, I think the timing is in such a way that I can't specifically talk about the numbers of these quarters right now. But I think if you were to look at the past trends, it's been a little flattish. We do believe that some parts of the markets have started moving up, and therefore we would believe some of these categories will start growing in the future. That's what would be my reply at this point of time.
So, no, the reason I'm asking is because I want to understand some trends. So, is it double-digit growth that you can do in FY25 in the kitchen and home appliances segment? Or do you think that for a while it could continue to be a single-digit growth? So, any kind of indication that you can give us?
Not at this point of time, please.
Okay. And how has the response been to some of the new launches? I'm sure you would, you would have some indication of how things are shaping up because you've introduced 27 new SKUs in the quarter gone by. How has the response been?
The response has been fairly good. Like I said, I think one part of the business that is very clearly indicating to us that there could be robust growth as we move forward is the adoption of some of the new products. The adoption of the new products and the response to some of the new products have been really good. And we do clearly see that there is a trend of upgradation happening, be it in cookers, be it in cookware, small appliances where we are present in. I think there's been a trend of the urban markets upgrading very strongly. And this upgradation is being facilitated by new product introductions and also some of the existing categories going through category upgrades and going through design upgrades as well. So overall, I think it suits us well to launch new products. The adoption rates are far higher. Like always, I think it's important to keep the relevance of the consumer in mind. And that's something that I think has been quite successful so far. So the new products are seeing good traction as we speak today.
Okay, got that. One final question from my end. Given that there are new products, there is premiumization, there's upgradation from consumers, is there scope for you to take your margins to that 15-16% mark? Currently, you're hovering around 11, 12, 12.5% as of last quarter. But is there scope over the next 1 to 2 years to elevate your margins to 15-16%?
So over a period of time, I do definitely think that's a possibility. But from our perspective, I think, like I said, it's important that we sustain the margins that we have today, build components to that. But of importance would be the top line growth. Because as top line growths come in and as our costs are largely capped and our capacities are available, I do believe that top line growth would directly flow into the bottom line over a period of time. So of more importance for us is to sustain the cost efficiencies that we have today, capacities available to be utilized better, and hence, therefore, a very heavy thrust on top line growth across geographies, across channels, across new product innovations like we speak, and premiumization. I think a combination of this would help us get the top line growths robust, and that flows into the profitability as we speak. So that would be a graded journey that I would see happening.
Okay, all right. Thank you very much, and I hope we speak after the first quarter earnings, right? And we'll have that opportunity, and maybe we can talk some specific numbers then. Thank you very much for joining us and giving us a sense of your vision for the company and what you'd like to do. So top line growth, really the thrust area in terms of how they want to drive things from here. And open to acquisitions, but nothing very specific at this stage. As I said, post Q1 numbers, maybe we'll have some more specific details. Stock actually has moved up from the time that we started the conversation. 5 rupees higher, 790. We'll take a break. We are back. We'll have the management of RR Kabel, Rajesh Jain, Chief Financial Officer, joining in to discuss their business outlook. Stay tuned.
Welcome back. Let's talk about Kabel now. After registering a strong volume growth in FY24, they're now targeting a 20% volume growth for FY25. To talk about business momentum, how Q1 is shaped, what's the outlook, what are the big triggers to watch out for, Rajesh Jain, the CFO of the company of Kabel, is with us on the show now. Rajesh, morning, and thank you very much for joining in. If you could just, first provide a backdrop of the kind of demand environment we're in. How were the last 3 months? Because we had the elections. Did it slow things down in terms of demand? And are you on track to maintain your 20% volume growth for FY24?
So, we always see our business in a normal origin of 12 months, and because on quarter to quarter, it becomes very tough to predict things in very shorter point of view. But as India economy is already doing good and it has to develop, since we have targets to make it a developed country, so since there will be growth and we are on track, what we have targeted to achieve 20% volume growth in FY25, it seems it is on the card.
20% volume growth for FY25 is on track. But particularly in the last 3 months, how was demand? Did it slow down on account of the election season? And also, how were, on a blended basis, how did the raw material cost for you fare? Just to understand the impact on margins.
This quarter, we have seen fairly very large kind of price fluctuations in terms of copper and aluminum. But it seems we have seen both the trends, like copper prices have gone up to 11,800 and it has come down to again 9,500 type of levels also. So, but we have to pass on this price change to our consumer, and as per our policy, we keep passing on this prices to our consumers. So there will be not a large impact on our profitability. And if we talk about the volume growth of this quarter, it is fairly greatest kind of quarter it seems, but overall, since there were election environment, so it seems it will be back on the track very soon.
Yeah, no, got that. Yeah, I was actually coming to the margin bit because there was a sharp run-up. We discussed this the last time you were on, Mr. Jain. Good morning, Prashant here. But now things are cooling off, and let's hopefully they stay that way. Your on margins, your guidance was an improvement, I think, of 100 to 125 basis points for the full year. That stays on track over 24?
Sure, yes. Good morning, Prashant. So, as per our earlier predictions also and planning also, we are planning to improve our margins by 100 to 120 bps, and we are on track in that trajectory only.
Can you give us a sense on the fast-growing FMEG segment? What are you seeing there? What have you seen for the quarter gone by? And which segments there are doing the best for you?
So from business growth point of view, again, in FMG also we are on track, and what we have predicted to achieve a growth of 20 to 25% in this year, and which will be ahead of the industry average. And if you see, we are seeing very good demand in fans, particularly looking to the very large and longer summer this season.
Okay, so 20% volume growth for FY25 is what you're targeting, but there are some new product launches in the pipeline as well. Can you take us through that? And particularly from your new products, what kind of growth are you looking at? Oops, I think there's some issue with that video. It's been actually cracking a bit for the last couple of minutes, so we'll try and just resume our conversation with Kabel in a bit, but just look at the markets. It's a century hit on the Nifty already, and it's just getting better by the minute. 110 points higher now on the Nifty, 24,150. And, I still don't have a habit of saying 24,000. I mean, it's always like 21,000, 22,000. I mean, 24,000 is this milestone that I honestly didn't think that we would hit so fast.
Many people are at 22.
In 20 sessions, right? Many people are still stuck at 21 and 22. Yeah, I mean, it's remarkable the growth that this market has seen. So all-time highs continue, and 24,150. By the way, we have to get used to saying 80,000 on the SENSEX very soon. Right? It's just 400 points away from that major milestone on the SENSEX. So great tidings for the equity market.
The index is doing well, and we were talking about how the index is of course doing well, but now maybe it's run up sharply. That is doing well, but look at the broader market as well, and some more stocks here. which are doing very well. MCX is up 4%. If you can highlight these, 4,014, 4,015 on MCX. Bombay Burma is up 12%, holding company. So that has got very large volumes for this point right now. MGL, that is Mahanagar Gas. Now, all these are new names which we didn't discuss in the morning. 4% there. Chennai Petro is up about 3.25%. It'll come up. That's Chennai Petro. Stocks, I think, is at about 987. And I think tire names. Maybe look at JK Tires, Seat, Apollo Tires. And I think these are all generally doing well. Seat is up 1, but I think the one which is up the most right now is JK. Yeah, 5% there. And we look at the others as well. JB Chemicals, 4.5% gain there, and very large volumes as well. There is Voltamp. I think there is a new initiation from one of the brokers this morning. Stocks up about 6%. Another holding company, Chola Holdings, 4% higher on that one at this stage. There is the insurance business there as well, and of course it owns, I think about 60-65% in Chola Finance. Snowman Logistics is up about 4.5%. And so much stuff, right? I mean, across the board, which is going on. 3:1 is what we have in terms of advances to decline ratio. So it's a pretty good looking screen.
Okay, well, we also have Rajesh Jain back with us of RR Kabel. Mr. Jain, if my voice is reaching you now, I was asking you about, you've given us a guideline of a 20% volume growth for FY25. But you also have some new products that you're looking to launch. What is the outlook on that? What is the kind of growth that you're looking at, particularly from new products?
So in FMCG, we have launched a few products in fan category, and we are expecting growth from there. Almost around 30% revenue is coming from new product launch only. So it is, and even in wire, we have launched our new category, which is a best-in-class housing wire, which is EV Fires or LSOH. So we are expecting a good growth from new products.
Okay, all right. Thanks a lot for joining in. Well, for now, the market is looking very good, but Dalal Street has also witnessed a host of block deals over the last few days. Let's connect with V. Jaishankar, the Managing Director and member of the board, Kotak Investment Banking, to talk about these block deals and how he's read into them. Jaishankar, thanks a lot for joining in. It's been a while since we've spoken to you, so thank you for taking the time out and speaking to CNBC-TV18. It's been block deals galore. How does one read into it? And what do you see? I mean, is this a trend that you see that can continue, given the kind of momentum that we have in the markets right now?
Yeah, I would agree. It's reading block deals. And I would say this is a trend that you have seen really gain momentum over the last 2 to 3 years. And the primary reason is the strong DI flows. Last year we had $42 billion of institutional money coming in, split equally between foreign and domestic. This year, in the first 6 months, you already have DIs pumping $26 billion, which is more than what they did the whole of last year. And if this trend continues, you're going to probably see a flow between foreign and domestic of $15 billion plus. So with that kind of money coming into the equity market, obviously it needs some new destinations. And I think in that context, blocks are a great tool because these are overnight trades mostly. And IPOs tend to be a lot more long drawn. So if you look at the first 6 months, very few IPOs. Of course, the next 6 months is pretty heavy, but the block deals have given the kind of conduit for investors to invest in good stocks.
But why, Jaishankar, hi, morning, Prashant here. But why, so local, domestic, of course, are buying. But again, that old question, why are where is the money going? So you must have a sense when you get a lot of this stuff done, you'd have a sense of, so promoters are selling 2%, 3%, 5%. Where is the money going? Is it going to buy, homes, real estate? What's happening? Or is it coming back into the market through family offices?
So, Prashant, the block deals sources are primarily three. One is, of course, the foreign promoters. You have seen Timken, Vodafone, Singtel, and a few others sell. They've been pretty sizable back, for example. And I think the foreign promoters selling this current year is probably in excess of $6 billion. You also have Indian promoters selling. You had Mahindra & Mahindra, Cipla, Tata Sons selling their stakes. So the domestic promoters have also monetized. And the third category are your private equity investors. right? And there have been multiple blocks, for example, in Embassy REIT, in Mankind, and so on. So I would say these are three primary sources. And in all the three cases, obviously, because these are all come through an FDI route, primarily, or if it's an Indian promoter, they probably are using for multiple sources. A part of it may come to the market, but the balance there is tough to say. But if a P investor is monetizing, he's still investing through some other funds. So in that sense, FDI is growing.
You said the promoter selling stands at $6 billion this year, which includes domestic, foreign, all of the three categories. 6 billion.
Total blocks this calendar year has been 13 billion. I was telling you the figure just for the foreign promoter selling. The balance $6 to $7 billion are between the Indian promoters and the private equity investors.
This calendar year, right, Jaishankar? 13
This calendar year.
total and 6 from foreign promoters.
That's right.
Yeah, no. So so again to that question, Indian promoter selling, just specifically out of the three Indian promoters when they're selling, is that should that be in any way used as a signal at all, as a comment on what go on. Sorry. And of course, each case is different. I mean, 1-2% sale is very different from a 5-10% sale. But I just wanted your thoughts.
Yeah, see, at the Mahindra and the Ciplas sale were just about a couple of percentage points. So it's not really big. Even if you look at Tata Sons selling down in TCS, Tata Sons holds closer to 70% plus. So selling $1 billion in such a large company doesn't dilute their stake much. So promoters, particularly Indian promoters, continue to stay very, very strongly invested into their companies. And there may be multiple reasons why anyone is doing this small monetization.
Okay. Now, let's move away from that to something which was approved yesterday at the SEBI board meeting, Jaishankar. This is the the delisting norms, a fixed price option which has been introduced now, right? Will there be takers for it? The question was put to the SEBI chairperson. She said, well, this was a demand from the industry. But what is your sense? Will companies who want to delist, who were not able to, because maybe there was a small group of shareholders who were holding out and not letting it go through, I mean, would a fixed price get the job done? What are your thoughts?
So we have to see, Prashant, because it's still early days. Obviously, SEBI is trying to facilitate companies to delist. And I think you should wait for the first couple of delistings to be attempted through this route. And maybe if there are any further fine-tuning that's required, I think all of us will find some solution.
But no, I'm not asking you to specifically say whether it will be a success or not. But is it an improvement over the current book building process?
Yeah, that is true, because the model price leaves the leverage completely in the hands of a few concentrated investors, and often leads to a green mail. And companies are stuck because they just can't delist. And to deal with multiple shareholders is not easy. See, overseas you have something called a forced delisting once you reach a particular threshold. In India, the norms are very different, and the model price is the one that made it very difficult. So in that sense, giving the fixed price option is one of the routes. It should help probably in some of the instances where the promoters are stuck.
Got that. And as you said, I mean, we'll see how it goes once it is attempted. What about have you looked at the holding company norms? Again, which has been approved by SEBI yesterday. What do you make of it?
I've not really gone into much of detail on that front, Prashant, so early for me to comment.
Okay. Got that.
All right.
Just one before we let you go. Do you have in terms of new issuances, IPOs, Jaishankar? There are a few which have been, there is Ola and there is Swiggy, and I'm talking about the bigger ones, but of course there is a steady stream of some of the smaller ones as well. How much of paper are we expecting through the primary route for the rest of this calendar year at an approximate level?
See, so far in the first half, we have seen about $4 billion plus of IPOs. I would probably guess it should more than double that quantum. So there are a number of IPOs which will try to time the market before the end of the calendar year. And I would say if you look at it a little broader from an 18-month time frame, you probably are going to look at $25 to $30 billion of paper coming in, which is really good, right? End of the day, when there is so much of flows, particularly from the domestic, foreign money also waiting in the wings, you need a lot of paper. I think IPOs will provide a very strong source for deployment.
Okay, we will leave it at that. Thanks a lot for joining in. Well, for now, very good looking screen. So let's get the technical guest on board. The Nifty is up 100 points. The SENSEX is up over 300 points. And the party continues on Dalal Street. Mitesh Thakkar is with us. Mitesh, hi. Good morning once again. You know, this is a market that is just defying gravity now. I mean, there's no other way to put it. But at some point, do you book your profits or do you take fresh long positions? What's the best way to approach it now?
I think a good way and a disciplined way would be to trail your stop losses. We had a gap up today. So in that sense, let's look at the option data also. There's a good build up around the strike of 24,000 and it's about 140 points lower from this spot. So I think that should be my new trading stop loss, maybe 10 points below that, and hold on to the Nifty. We had a target of 24,100, which has been crossed, and the next target will be close to about 24,450, 460 zones on an extension basis. So maybe we might head towards those levels, but it is overbought. So I think, I would be slightly tightening my stop losses regularly and then see how it goes from there.
By the way, Bharti Airtel has now dipped in the red. So it opened up in the green with a gain of close to about, I think, 2 to 3% at one point of time on Bharti Airtel. But now it's given up all those gains. So perhaps the news is priced in, and maybe Bharti Airtel's tariff increase, which ranges between 10 to 20%, could be lower than what the street was anticipating. Maybe they were hopeful of a blended tariff increase closer to 20%. So that could be one factor. And plus, this month itself, for this week, the stock has seen a rally of close to about 5%. So some profit booking, the news may have been priced in. Bharti Hexacom too sees weakness for the second day in a row. Yesterday, it was down 5%. The stock has more than doubled since its IPO price, since its listing. Jefferies downgraded it yesterday to a hold. We're talking about Bharti Hexacom because they're saying that there is not much upside from current levels given the up move, and today it's down another 4.5%. Mitesh, you want to quickly come in on any of these telecom names, even Vodafone Idea is in the red.
But all these charts are good. Maybe it's just a case of booking some profits in news. But to me, I think Reliance, Idea, and Bharti, I think all remain in uptrend. A good way to trade here would be to look at Reliance, and in the morning show also I discussed the stock. We have positions there, so there's vested interest. Looking at a target of around 3260, 3300 in the next couple of weeks. So I think that could be a good bet. If somebody wants to buy a fresh, then maybe you would want to see some kind of a pullback and then accumulate slowly. 3050, 3060 would be an extremely good range to buy into Reliance if you get those prices, and keep a stop below 3010, and 3260, 3300 should be the target area.
Oh, 3260, 3300 is the target area for Reliance. Okay, big upsides forecasted over there. Got that. But we forgot to ask you about your own stock ideas for the day. So, Mitesh, for the rest of the day, what are you looking at?
So, I would recommend a buy on ONGC with a stop at 266 for targets of 280. And FMCG is showing some good strength today. So Nestle is a buy. Keep a stop below 25.30 and look for targets of 26.30.
Okay, thanks a lot for that. So that's on Nestle India. By the way, if you're wondering what's happening with Polycab, there's a large trade that has happened, as we've been telling you, and the promoters have sold 2% stake. But just perhaps looking to cash out in this very high liquidity market, right? So the stock from the highs, I think it hit a high recently of around 7,500 or so. It's come off quite a bit. But the earnings, the fundamentals continue to be very strong. But the street is a bit spooked now that promoters have sold a bit of stake. Let's do one thing. Let's take a quick commercial break. Still very strong tidings for the market. On the other side, some more stocks on the move. Stay tuned. Welcome back. Well, it is, the good part about this market is there's no profit booking up until now. It's steady state, smooth up move, and a lot of individual stocks in focus. So let's get straight to it. JSW Energy is the one we're looking at this morning. Vivek is joining in to tell us why you should be watching that. Vivek, over to you.
Well, the company in focus is JSW Infra and Navkar Corporation. Like we mentioned, JSW Infra actually, along the lines of the CNBC-TV18 news break, dated January 18th, JSW Infra has gone ahead and acquired majority stake from the promoters of Navkar Corporation. So JSW Infra is looking to acquire close to 70.4% stake from the Navkar promoters, and this particular deal has been done at a discount to yesterday's closing at 95.6 rupees a share. Now, given the fact that they will be acquiring controlling stake, they've also announced an open offer for another 26% stake in the company, and this particular open offer is at 105.3 rupees a share. So this particular deal, when you're talking about the valuations, the enterprise value of the deal is 1,644 crore, and the deal is expected to be closed by the third quarter of FY25. What is it that JSW Infra is getting from Navkar Corp? One container freight station and a Gati Shakti terminal at Panvel, along with that 2 container freight stations at Ajivali in Panvel, and also an ICD, an inland container depot. So quite a good acquisition as far as JSW Infra is concerned, given the fact that it gives adjacencies in another business as well. Now, talking about the valuations, InCred says that this particular deal has been done at a price to book value of 0.75 times FY24. EV to EBITDA is at 27.3 times, FY24 levels, and the proposed transaction implies almost a 13% discount to yesterday's closing. Along with that, JSW Infra also, remember, has secured a 35 years Gati Shakti concession at Arakonam. The construction timeline is 18 months. The details of the revenue share as well as the land license fees that JSW Infra has to pay is still awaited.
Thank you very much for that, Vivek. Get into a break on that note. On the other side is our special segment. It's the economy. Lata will get chatting with Neeraj Gambhir of Axis Bank and Parul Mittal Sinha of Standard Chartered Bank as Indian bonds mark their entry in the JP Morgan Emerging Market Bond Index today.
Big day on Bond Street. Indian bonds enter the JP Morgan Emerging Market Bond Index today. The Indian government securities have apparently already seen worth inflows of about $8 to $10 billion in this year. Actually, starting September, when it was announced that India will be in the index from June 28th. So some inflows have come, but it's a $30 billion almost that is expected, because India has a 10% weight in that index, tracked by about $300 billion worth of bonds. So we should get 30 billion in the fullness of time by March 2025. But what happens today? Are people sitting on the sidelines, and on June 28th, at least 1% comes in, so 1% weightage, which means does 1.5 billion, 2 billion enter today? Are we going to see some fireworks in the bond and currency market? For the immediate and the medium-term questions, Neeraj Gambhir, Group Executive and Head Treasury Markets and Wholesale Banking at Axis, and Parul Mittal Sinha, the Head Financial Markets India and Co-Head of Macro Trading South Asia at Standard Chartered. Parul and Neeraj, thank you very much indeed for your time. Parul, what is the screen saying? I found the bond yield flat, but London opens at whatever, 1 o'clock our time. Are we going to see some, 6.95, 6.94, 6.9 today?
So yes, like you said, bond market is opening quite flat. There is quite a lot of excitement, discussions with sales, with clients going on. We are seeing a lot of queries as well by clients, but we don't expect that because of the bond market, like you all know, that we are a very decent liquid market, and I expect that a lot of participants have already built up a fair bit of positions to offload as and when these purchases come in. Also remember that we have a regular scheduled auction day today, so the market has to absorb that supply as well. So we're all excited about the potential inflows. What we expected, if the inflows are to the tune of $500 million to $1 billion, market will remain positive and optimistic of these things come in. If, however, we print less than $500 million worth of purchases today, that would mean somewhere market participants are disappointed. We will expect that maybe the pace of inflows that we were expecting to be of 2 billion per month, some expectations will get petered down. We just to remind the viewers, more than $10 billion have already flown in of the 25 to 30 billion of inflows expected. The main question on all our minds is this 10 billion in addition to the 25 to 30 billion dollars? Or part of that
Parul, may I interrupt you? I think you have to set your audio right. There is some bit of a jar in the audio. Coming back to you in 1 minute. Neeraj, what is your sense of the same thing? We know that 10 billion has come, but we don't know whether all that is only by the passive funds. At least nobody is telling me that. Is it possible that people would have registered and will be waiting for today to come? Should we expect something second half?
So, Lata, as far as the exposure by index tracking funds is concerned, they actually have 3 different ways of taking it. One is by direct investments in the government bonds onshore. Second is that they can also buy some of these rupee-denominated bonds issued by supranational entities. And thirdly, they can invest in derivative instruments. So far, we've seen about $11 billion, which has been the increase of FPI holdings in the local bonds. We don't know how much of that is by index tracking guys and how much of that is by sort of active fund managers who may not be necessarily tracking the index, so hard to say that. Secondly, some amount of investments has also happened through the supranational bonds. So the question is that out of this 25 to $30 billion, how much amount will actually come into India and how much amount will be invested through the supranational bonds? Now, that's what Indian markets will not see. So estimates are somewhere between 1.5 to $2 billion of fresh inflows over the next 10 months, which will basically total up to somewhere between 15 to $20 billion. But that's an estimate. Actuals can vary depending upon market conditions.
Fair point. Well, actually, I have learned all the jargon over the past few days. Supranational bonds are bonds issued about India, on India by, ADB and institutions like that. So that's one way of taking exposure. There you don't have the tax problem, withholding tax issue. So some people take exposure to India through that. The disadvantage over there is it's not a very deep market, I was told by Kenneth Akintewe of Aberdeen Investments. He was on the show yesterday and he said, yes, Supra is a good idea because we don't pay tax, but it's very difficult to get out of that market, hardly any liquidity. So people like him still believe that the money will come. But Parul, now we have you on a better line. If let's, for argument's sake, assume that people have registered. Some people called it a very painful registration process, but they have registered and waiting. And say 500 million or 1 billion comes in post 1 o'clock today. Is it that Indian banks are sitting long, people like you all, and will immediately sell, the PDs or something? Or do you think they make... Today there's also RBI auction, no? So they can buy the 10-year over there. Short point, will the 10-year bond yield in the market see any movement today?
So, Lata, if the bond yields close lower by 2 basis points today, that is the maximum any of us will be expecting for that to happen. Like you said, a lot of market participants are already sitting long in anticipation of these flows. Also, the auction today needs to be absorbed, and that's in the new 10-year bond as well. So we don't expect a move bigger than 2 basis points. So the range will be, if market is disappointed in terms of flows, if less than $500 million of inflows comes in today, we can expect bond yields to inch higher by 2 basis points. If we see inflows closer to $1.5 billion, then we can expect a 2 to 3 basis points rally. Okay. Even there, I expect the domestic banks to come in and take some profit, because bonds have been really stable in the last few months, really range bound. So we've seen selling on the days of some bond yields moving lower, and purchases by them on days where yields go higher. So that trend will definitely continue.
Fair enough. So at least the yields are capped. There is this big buyer on certain days. Neeraj, what would you say is the structural change? Over the year, by the time we come to March 2025 or whatever, even June 2025, what can be the advantages or otherwise for the Indian market?
So, Lata, first of all, $1.5 billion to $2 billion of monthly flows is actually very small for the bond market. The daily trading volumes and the amount of bonds that are held by some of the large domestic players, including banks, are actually quite a large. So it's not as if this flow is going to make a very big difference to the market. I think the key change here is that we have a completely new investor class globally, which has so far not been exposed to Indian fixed income market. It will get to have an exposure into India. It will force some of these investors to actually look at India closely, look at India's macro story closely, and position themselves accordingly. I think it basically, effectively exposes India fixed income market to a very large and very deep pool of, capital and a set of investors who have all along basically been on the sidelines or may not have invested in India because they really didn't need to, because we were not a part of any index. Now that it changes. I think over a period of time, it deepens the market, it brings more flows into the market, and it brings a different class of investors.
Okay. Fair. Would you say that corporate bond market will be also getting some kind of legs to run, Neeraj? Because, a large... Yeah, go ahead.
So, a direct and indirect benefit. The indirect benefit is that if the government bond yields stay low, it basically makes the corporate bond yields also stay low. So there is a pricing benefit there. The indirect benefit is that a set of investors who are actually looking at India fixed income market, they may start from government bonds, but over a period of time, they may start looking at some of the other instruments as well. For example, some of the PSU bonds, which are quasi-sovereign, they may also start being interested in buying in them. So it expands the horizon.
Overall, cost of capital could fall a bit. Parul, now to the more important question is rupee. I was told again by Kenneth Akinteve that the most attractive part of India is the rupee, the most stable currency. Do you see, appreciation? Just what should we be prepared for in the currency market?
So today in the morning, amid a lot of queries and some inflows also on the dollar rupee side, we saw dollar rupee move lower by 5 to 6 paisa compared to the previous close. And that itself, creates some excitement among the traders because dollar rupee has also been trading extremely stable. We think dollar rupee can head down to 83.30 kind of level because of inflows which may be lined up today. But there again, range trading remains the core proposition for traders. Traders would probably take the chance to go long here and look for an uptick above 50 paisa or so. So not very big moves expected. The point being, the size of inflows is much smaller than the normal daily volumes, whenever we look at either bonds or FX. So I'm not expecting sizable moves, but yeah, 5 to 10 paisa movements here and there, that will keep the market
But
excited.
over the year, like as we go towards December 2024, you think there is a chance of rupee appreciation, 82 something, Parul?
Not expecting it to fall below 83. We still think it will remain stable around 83 levels, mainly because we expect RBI to step in and continue to collect reserves.
Yeah, I was also told that they are looking at even the yuan very closely, or should be looking at the yuan closely, which has been depreciating. So maybe Reserve Bank won't allow the rupee to appreciate. Neeraj, medium-term view for the currency. Now and up to the end of the year, you think appreciation is possible?
I think to answer your question, Lata, the overall impact of these flows will be approximately $20 billion. If you look at a balance of payment situation, I think if you look at surplus of about $50 to $60 billion, the 20 is being contributed by these flows. Had these flows not been there, we would still be having a balance of payment surplus. Now, whenever we have a balance of payment surplus, the direction of rupee is entirely governed by RBI's intervention strategy. And I think they have been very, very focused on keeping rupee as a very stable currency, making sure that there is no undue volatility. So I think that trend will continue. On a broader basis, I think it also depends upon what happens to dollar. It's been very strong. We've seen, dollar index cross 106 and maybe targeting 107. So if the dollar strength continues, I would feel that despite the fact that we will have these flows, we might have a bit of a weakening bias on the currency.
Okay. Very quickly, Neeraj, running out of time, but do you think Indian banks are in a good position? They are the guys who hold all the bonds, some mark-to-market gains or at least not losses?
Well, the move hasn't been very large. I think they're still stuck at around 7%. We're trading about 5 basis points here and there. So I don't think it's making a huge difference to the valuation gains to the banking system. But yes, to the extent it creates more demand in the market, I think the overall demand-supply situation for government bonds looks far more favorable than it did, let's say, last year.
Okay. Out of time, but of course this calls for a medium-term discussion rather than a today discussion. But Parul and Neeraj, thank you very much indeed for your time. You're stepping in. We are stepping into global indexes. So today is not the day when there will be fireworks. But clearly, it was in 1994 that India stepped into the global equity indexes, just feeling the ground, as it were, entering the MSCI index. And now, we have something like $800 billion in Indian equities. So this is the start for the bond market, and perhaps the best times will come over the decade as, India becomes more accepted as a bond instrument investment. Thank you very much for watching this special show. It's time for a break. Chartbusters coming.